Good evening, I'm Giuseppe Basile, I'm the analyst and trading mentor. You can find the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Tuesday, May the 6th, 2014, and it's 10 past 10 p.m. time in Toronto, and in this video I'm going to review for you the euro dollar, the first four markets: the euro dollar, the S&P 500 mini future, the dollar index, and the and gold. Excuse me. Actually, this video is a daily update for tomorrow, May the 7th, and as you know, I review the markets during the week as an integration of the weekly review I only send to my newsletter subscribers. So if you want to receive the newsletter, just go to my website. It only takes a few seconds to register. I hate spam as much as you do. I will only use your email for the purpose of the communication, and you can unsubscribe at any time. You are in full control. So starting with the euro dollar, then what you see on the screen is the daily chart, and the euro has not been easy to trade, but as you can see, is respecting the sequence of measured moves here. And we saw, I was anticipating, actually I anticipated at the beginning of the year right here, a move lower. The market started moving lower, but eventually broke the sequence of measured move lower, so it started a move higher. And again, at the beginning of March here, break the sequence of measured move lower, but then held this measured move from lows in February to highs in at the beginning of March, as you can see here. So once that happened, on top of an important area of support, we know that there's an inversion of trend, and that's what happened here. So you know that this area of support 137.22 as a target right at that 141 we've been following since now some time, actually since February 2013. Can you imagine how important are these levels, and how important is program trading, which tries always to push price into target. So clearly this 140.80, 141, it's an important level, both on the daily time frame and on the weekly time frame. So that's where the market is going. And actually today, on Tuesday, we actually filled almost the first target here of this inner measure move, and I'm going to go back to normal scale here so that it's easier to see. As you can see, the market came 9 pips shy from this level, so I don't consider this level hit at the moment. I think we're going to see another move higher here into the previous area of profit taking here, and a lot of people will just see a double top here, while if the market corrects a little bit here, is because there is a profit taking level here. That's a very important distinction, because lots of people do not see this area of profit taking for program trading. So there are two possibilities now for this market: to either continue higher, and in that case there is a second target. It's an extension long for this measured move, and as you can see, it's close enough into the 140.80. So if we just continue higher, we're going to hit that 140.80. As you will see later on the dollar index is in a free fall now, and broke down also the October resistance area. Excuse me. And so there's a still possibility here we just continue higher and break out and get into this area 141, and then we will see some profit taking there, serious profit taking. If you ask why, let me give you a little bit of perspective here on the weekly time frame. As you can see, this measured move that was actually identified back at the beginning of February last year, actually as a target at 141, as you can see here. So all the programs, all the professional traders who committed at these levels are looking to take some profits at 141. So expect, unless we really see a free fall of the dollar index, expect some profit taking here, which would correspond probably to other previous lows in the dollar index, as we'll see later on. So 141 is the target for me, and that's where we can actually see price. Now SP500, you will remember that I mentioned that there was a possibility that every time this market got into this 1882 we would see selling, and we saw selling now 1, 2 and 3 times and 4 times here. So clearly this is an important level of resistance and profit taking, actually more than actually resistance. It looks to me that it's more profit taking than people opening new shorts here at the moment. So we'll need to see what happens. And when we study price on the 4-hour chart, I mentioned a sequence of measure move here, and you will remember that on Sunday I mentioned this potential support here. Support at 1883, which actually worked and brought price into first target. So then we could actually have an entry short here, because market goes below 1876.75 here with a stop above highs, and that's an entry short with a stop above previous highs. And this market now gave already 1 reward to risk, 2 reward to risk, probably 3 reward to risk here. And the way you can trade as a swing trader is to take alpha off at the first time you had the first unit of risk in gain. And that's the way I like doing things, because then you can if you're a swing trader, you can sleep well, you can actually do other activities as well. You don't need to watch the market all the time with a stop above highs. See, we saw this retracement again, and here you are still in a half of a position with a potential for more important lows here. Moving to the dollar index, of course, dollar index important development here, and we mentioned that. We mentioned that there were these 2 areas of resistance, one at 80.52 and the other one was 80.07 here, 80 level, and they were both respected here. And as you can see, the closer let me change the scale here so we discover what there is below prices here. So it's very interesting. And this 79.05, it's the first target of this area of resistance here. We are almost there. It's very much like the euro. We didn't touch that level just yet, but that's where we are going. And this larger area, the 80.52 level of resistance, where the actual resistance area starts, as a target a little bit lower at 78.84. So that's where this market is going. So previous lows in October, they are gone, and I don't look at the market in terms of lows and highs. I look at market in terms of price framed by sequence of measure moves here. And as you can see, there is the potential for this market. If these entry shorts brings price into the second target, there is the potential for this market to go right at that previous or close to those previous lows here. If we lose 76.41, you can kiss goodbye the dollar, because when we look at the big picture, that's where we are here. And on the big picture, there was participation in 2012 and 2013 short in this market clearly here a number of times. So these gentlemen here, they have targets below 76.42, and actually can even show you where they have targets, and this is very important. So the targets are pretty let's see. I still cannot see it, so it's even lower than that. So here you go. So the target of those gentlemen is at 72.33. So the target target of participants who shorted this market at 85 here, twice in 2012 and twice in 2013, have target 72.30. So that's where this market has the potential to go, and you have to be very mindful and careful here because there's a serious possibility that these guys here want to bring price to their first target, which would mean a lot of trouble for the dollar, of course. Now, from a fundamental point of view, if we can still speak about fundamentals here, the difference would be made by whether Mario Draghi decides to actually help the dollar, so help the European Union, and as an effect of pushing money into the system, help the dollar as well. I don't know this, and I respect people who think they know this, but I don't, and what I'll do, I'll just follow price. And so this consideration brings us to the next market and last market, which is the gold mini here. And you know that on the weekly we are actually navigating on top of this larger area of support, 1229, and then there is this shorter term area 1287, which is working very well. And let me change the scale back here and I'll show you why this is working very well. And as you can see, let me remove the rest for a moment. As you can see, this 1285 was respected once, twice, 3 and 4 times, and 5th time. So clearly, you know, there is participation from program trading and professional traders at this level, and this level has targets above, as we know, as targets at previous highs here, even above the high we saw in mid of March. Now, I mentioned that there was a possibility for an entry long in this market, swing trade, of course. So whether, I mean, so if price went above this 1307 with a stop below lows here, and of course, you know, the safest is always the lower low here, which is a big way. The point is that this market might not look back. So if that's the case, you know, that's the only way to enter this market. Now, if this market does indeed look back, there is another. There might be an opportunity to pick it up if it retraces at the all the way halfway back here. So I'll leave for now this trace here, and if the market comes again into the 1294 and we see participation on the long side, that is gonna be a very good reward to risk entry with a stop again. I mean, we can put the stop below low here, and there is a possibility for actually you know, driving this price higher. I told you where we could see this price, especially if money is coming out from the dollar and going into, you know, the other currencies and gold as well. So let's see, very interesting times indeed, very scary as well. Let's see what happens to the dollar and let's see whether the euro, the European Union, will step in to actually can I say, I would say save the dollar here, but you know, I just look at charts. What I see at charts on charts is that, you know, the market could actually get into this 141, pushed even against fundamental if Mario Draghi comes in. And then if Mario Draghi comes in, we're going to see a retracement after hitting 141. Possibly, that's just a scenario. That's just a scenario. I mean, it's not. I'm not saying that this is going to happen, but the possibility is that we get to the 141, then Draghi steps in and brings price into 134.30, and off we go. Excuse me. So thank you very much for your attention. I hope this is interesting. I wish you a very good continuation of the week. Thanks for sticking around. Bye bye now.